Welcome to the deep dive. Wow, what a week it's been in the financial world, huh? Just a whirlwind of stuff.
It really has. I mean, you've got corporate earnings kicking off, market highs, big policy moves. It's a lot.
Totally. And even some, unexpected moments making waves. So for this deep dive, we're going to try and pull these threads together.
Make a mosaic out of it, yeah. See how these different headlines connect.
Exactly. We want to look at how companies are adapting, what new policies mean for, your finances, and even how some viral stuff fits into the picture.
The mission, basically, is to cut through the noise, find the key insights, and hopefully give you that aha moment.
Right. Turn all this information into actual understanding. Ready to jump in?
Let's do it.
Okay, segment one, corporate currents. How are companies navigating all this? And we have to start with the markets, right? July 21st, big day.
Yeah, new records for the S&P 500 and the Nasdaq. The S&P actually closed above 6,300, first time ever.
Wow. And the Nasdaq hit, what, almost 21,000?
20,974. Pretty incredible. The Dow lagged a bit, though. Ended slightly down.
Still that overall optimism. You mentioned earnings season kicking off. How's that looking?
It's looking pretty strong, actually. Early days, only about 60-something S&P companies reporting so far, but over 85% have beaten estimates.
85%, that's high.
It is. And it means Q2 earnings are tracking about 5% year-over-year growth, which, considering everything, is a really positive signal. Shows some corporate resilience.
Definitely. And we saw some specific companies really pop, like Verizon.
Oh, yeah. Big day for them. Stocks surged over 5%.
Their best day in over a year, I think.
That's right. They beat on earnings, sure, but the big thing was raising their full-year free cash flow forecast, significantly.
To what, almost $20 billion? Or between $19.5 and $20.5 billion?
Exactly. That kind of guidance, especially from a mature company like Verizon, tells investors they've got flexibility. For dividends, debt, whatever, it's a strong signal.
Yeah, clearly resonated. Okay, then there's Domino's Pizza. Kind of a different story, but also positive.
Right. They leaned into this whole economic climate. Q2 same-store sales in the U.S. up 3.4%, beating estimates.
And their CEO, Russell Weiner, basically said industry headwinds are tailwinds for them.
Yeah, he did. Their strategy is all about value, like that $9.99 to steal market share, as he put it.
And the interesting part is it worked across all income levels. That seems unusual right now.
It really is. Most fast food chains are seeing lower-income consumers pull back. Domino's bucked that trend. It shows that a clear value message is, incredibly powerful right now.
It's smart positioning. Okay, on the flip side, you've got Intel. Their earnings are coming up, but it feels like the focus isn't really on the Q2 numbers.
Not so much, no. It's all about the future strategy under the new CEO, Lip Butan. I mean, they've lagged in AI. They've had huge job cuts.
So the market needs a roadmap.
Exactly. A clear vision for how they're going to compete, especially in AI. It's a really pivotal moment for them. Can they turn it around? That's the question.
Okay, let's talk about some other big strategic moves. Block, the fintech company.
Yeah.
Big jump in their stock on Monday.
Yeah, up 7%. That was because S&P Global announced they're replacing Hess in the S&P 500 index.
And that's not just prestige, right? There's a real mechanism there.
Oh, absolutely. It's huge. All those passive index funds, the ones that just mirror the S&P 500, they have to buy block shares now.
How many shares are we talking?
The estimate is around 101 million shares. That's basically guaranteed demand being created overnight, a massive tailwind for the stock.
Wow. Okay, so that explains the jump. But then you look at Robinhood.
Right. Robinhood's stock has soared, 345% in the past year? Market cap nearing $100 billion.
But still not in the S&P 500.
Still excluded.
Yeah.
It just shows inclusion isn't just about market cap or stock performance. There are other criteria: profitability, liquidity, share structure. It's complex.
Interesting contrast. Okay, another area heating up seems to be railroad mergers.
Yeah, there's definitely chatter. TD Cowen upgraded Norfolk Southern and CSX, citing the potential for broader industry consolidation.
What would that mean? Bigger picture.
Well, consolidation in a critical infrastructure sector like rail could, potentially improve efficiency, better logistics, maybe smoother supply chains.
Yeah.
But it also raises big questions about competition, market power, regulatory oversight. It's a balancing act.
Always is. Okay, so with all these corporate shifts, it brings us back to investing. How should people approach this? I saw David Booth's name mentioned, the market legend.
Yes, David Booth. His whole philosophy is basically about indexing and systematic investing. Comes from academic finance.
The idea being?
The core belief is pretty simple. The market knows more than you. Stop trying to outsmart everyone and pick winners, because it's incredibly hard to do consistently.
So just buy the whole market.
Essentially, yeah. Focus on capturing overall market returns through broad index funds. It's a patient, long-term approach, kind of the opposite of trying to time the market or pick hot stocks.
Got it. Okay, that's a good perspective. So let's shift gears. What does all this government action mean for you in your pockets? Segment 2, policy and your pockets. And the big one is obviously this big, beautiful bill that was recently signed.
Right. And we just got the CBO score on July 21st. The Congressional Budget Office estimates it'll add about $3.4 trillion to the national debt over the next 10 years.
3.4 trillion. So what are the key pieces impacting people directly in 2025?
Well, first, it makes the 2017 tax cuts permanent. Then it increases the standard deduction, like for single filers. It goes from $15,000 up to $15,750.
Okay, a small bump.
A small bump, yeah. The child tax credit also gets a boost from $2,000 to $2,200 per child. And then there are these new temporary deductions for 2025.
Temporary ones like what?
There's a $6,000 bonus deduction for older Americans, 65 and up, plus new deductions for tips, for overtime pay, and even for interest paid on car loans.
Interesting. Okay, but what about the other side? I heard about this SALT torpedo.
Yes. The SALT deduction caps state and local taxes. That stays in place, and for high earners in high-tax states, it effectively creates this, well, they call it an artificial tax rate, almost 45.5% in some cases, because they can't deduct all their state and local taxes.
Ouch. And the ACA subsidies, the Affordable Care Act.
That's another big one. The enhanced premium tax credits, the ones that helped lower costs during the pandemic, they're set to expire in 2026.
Which means?
It means the return of the subsidy cliff. If nothing changes, over 22 million people could see their health insurance premiums jump significantly. A huge potential impact.
Wow. Okay. Lots to track there. Moving to something else on everyone's mind, Social Security. We heard from Cindy Greening, a retired professor.
Yeah, her quote was powerful. Social Security is the only money I have in the world. She said she couldn't imagine what she'd do if it stopped.
It really highlights the stakes, doesn't it?
Absolutely. And, despite all the political fighting, there's actually a really broad consensus across parties, generations, economists that the program has to be saved. It's just fundamental for millions of people.
Yeah, the how is the tricky part. Okay, let's talk real estate. Always a hot topic. The median U.S. salary now, 2025, is just over $80,000. What does that actually buy you in terms of a home?
Well, the old 30% rule, don't spend more than 30% of your gross income on housing, would suggest about $2,000 a month for someone earning $80.
But that's not just the mortgage payment, right?
Not even close anymore. You've got utilities maybe $380 a month on average, property taxes, which vary wildly, homeowners insurance averaging maybe $275 a month last year, and if you don't put 20% down, you've got PMI, private mortgage insurance.
So realistically, what kind of mortgage payment fits?
If you're aiming for, say, $1,200 to $1,500 a month just for the mortgage principal and interest on that $80 salary, assuming you have a 20% down payment and get a 30-year fixed rate around 6.5%.
Which is, roughly current rates.
Right. You're looking at affording a home priced just under $300,000.
Under $300K. That really shows how tough affordability is, even with a decent salary.
It really does. The dream is much harder to reach.
And speaking of affordability, condos. Why do people seem so down on condos sometimes? They seem like a legit path to ownership, even with HOAs and shared walls.
They absolutely are. Especially in expensive cities, condos are often the only entry point. I think the negativity comes from, HOA fees, maybe worries about resale, or just wanting a detached house.
Yeah.
But financially, for many people, particularly first-time buyers, it's a very smart way to start building equity.
Makes sense. Okay, shifting from homes to getting around. Big changes in the airline industry, Southwest. Getting rid of open seating after 50 years.
Huge news. Starting January 2026, they're moving to assigned seats. Tickets for those flights actually go on sale later this month, July 29th.
Wow. What's the new system?
An 8-route boarding process. They think this whole shift will add $800 million to earnings this year, just from the announcement and planning, and then $1.7 billion in 2026.
So it's purely a revenue and efficiency play, moving away from their iconic model.
Seems like it. Prioritizing the bottom line and maybe, trying to streamline that chaotic boarding process. It's a major strategic pivot.
Definitely a change. And then you have Ryanair tackling oversized bags in a unique way.
Yeah, this is kind of funny. They're giving employee bonuses about €1.50 per bag right now, capped at €80 for spotting bags that don't meet the size limits.
Bonuses for catching rule breakers.
Basically, yeah. And they're even talking about increasing the bonus to, quote, eliminate the scourge of oversized bags. It's a creative, if slightly unusual, way to enforce policy using incentives.
Eliminate the scourge. Okay, let's move into segment 3, the tariff tug-of-war. That August 1st deadline is looming. What's the actual situation? Sounds like mixed signals.
Very mixed. You've got Commerce Secretary Howard Lutnick saying August 1st is a hard deadline for payments to start.
Okay, hard deadline.
But then Treasury Secretary Scott Bessent is framing tariffs more as a negotiating tactic. He says they're meant to put more pressure on trade partners to get quality deals, implying talks can continue past the deadline.
So, pay up, or maybe we'll keep talking. That creates a lot of uncertainty for businesses.
Exactly. Massive uncertainty. And we're already seeing the impact. Stellantis, Jeep, Ram, they warned of the potential $2.7 billion loss for the first half of 2025.
Wow, a loss. Why?
They're blaming it partly on the early effects of these U.S. tariffs. Their North American shipments in Q2 were down 25%. They expect the full-year tariff hit to be $1 billion to $1.5 billion.
That's a direct hit to the bottom
A
line.
huge hit. Shows the immediate financial pain these policies can cause for some major companies.
But then completely different perspective. The CEO of Cleveland-Cliffs, the steelmaker.
Right. He actually praised Trump's tariffs and called for a new Fed chief while he was at it.
So one CEO sees disaster, another sees benefits. What does that tell us?
It tells us these policies have very selective impacts. For a domestic steel producer like Cleveland-Cliffs, tariffs on foreign steel are protection. They help them compete, potentially raise prices, gain market share. It's classic trade policy dynamics, winners and losers, depending on the sector.
Okay. And this tariff situation is tangled up with bigger geopolitical issues, right? Like China's ties to Russia and Iran.
Definitely. China is the biggest buyer of Iranian oil and the second biggest buyer of Russian oil. The U.S. argues this money funds activities that undermine global stability. So those energy ties add a whole other layer of friction to the U.S.-China trade talks. It's not just about widgets anymore.
And part of the U.S. goal seems to be reducing reliance on China as the world's factory.
Yeah.
They make, what, 30% of everything?
About 30% of global manufacturing, yeah. So curbing that dominance, trying to reshore or friendshore manufacturing, that's a major underlying strategic objective behind a lot of this trade pressure.
But how are the tariffs hitting U.S. ports? I heard smaller ports are getting squeezed.
They really are. Places like Oakland, Jacksonville, New Orleans, they're getting sandwiched out, as one report put it.
Why?
Because importers rushing to get goods in before potential tariff hikes or deadlines are flooding the biggest, most efficient ports, L.A., Long Beach. They're concentrating freight there.
So the smaller ports lose volume.
Exactly. Oakland saw volume drop over 10% in June, down 13% year over year. That hits local jobs, trucking, warehousing, the whole regional autonomy. And port officials say it's not just a blip, it's a market recalibration. It also messes up logistics, leading to higher costs down the line.
It's amazing, though. We've had this kitchen sink thrown at the economy. Tariffs, trade wars, inflation, high interest rates yet, no recession. How has the U.S. economy held up for 5 years?
Connecting the dots, the biggest factor seems to be the labor market. Consistently low unemployment.
People have jobs, so they keep spending.
Pretty much. That consumer spending keeps the wheels turning, which helps keep unemployment low. It's created this surprisingly resilient cycle that's absorbed a lot of shocks. So far, anyway.
Okay, let's move to our final segment. Segment 4, Tech and Innovation, from quantum to crypto. And we have to talk about the Federal Reserve. Chair Powell is still under immense pressure.
Oh, absolutely. Treasury Secretary Bessent is now calling for a review of the entire Fed institution and its function. He talks about an intensifying conflict between the White House and the central bank.
Conflict over what? Interest rates?
Rates are part of it, definitely. Bessent has also accused the Fed of fear-mongering over tariffs. It's getting pretty pointed.
And this is showing up in weird places, right? Like prediction markets.
Yeah, that's fascinating. Markets like Kalshi are taking bets on whether Powell will be ousted. Over $2 million traded just on that question. It shows just how much speculation and, frankly, uncertainty there is around the Fed's leadership right now.
That's wild. And you hear about frightened markets because of the threats against Powell. Plus, there's that whole Justice Department investigation.
Right. Requested by Representative Anna Paulina Luna over Powell's statements about building renovations at the Fed, it just adds another layer of political pressure and scrutiny onto the institution.
Raises big questions about central bank independence, doesn't it?
It absolutely does. How much political pressure can or should a central bank withstand? It's a critical issue for market stability.
Okay, let's pivot from traditional finance to crypto. Huge news from Trump media, DJT. They've piled up a lot of Bitcoin.
A massive amount. Reportedly $2 billion in Bitcoin and related assets. That's apparently two-thirds of their liquid assets now. And it's been fueling their stock price.
This is part of the president's broader pivot to cryptocurrency.
Seems to be. Crypto reportedly makes up most of his personal wealth now, too. And he's stated this goal of making the U.S. the world's crypto capital, signing that Genius Act for stablecoin regulation.
Stablecoins being the cryptos pegged to, like, the dollar.
Exactly. Designed to be less volatile. But, this whole situation also raises concerns.
Yeah, critics are pointing to potential corruption, right? The president having huge personal stakes in an industry he's actively regulating and promoting.
It definitely brings up serious ethical questions about conflicts of interest. Transparency is going to be crucial here.
And crypto isn't just for crypto companies anymore. Figma, the design software firm, is going public.
Yeah. Potentially huge IPO, maybe $15 or $16 billion valuation. And buried in their filing details,
What they put in there.
they authorized something called blockchain common stock, basically a digital version of their shares. And they disclosed investments in stablecoins and a Bitcoin ETF. MarketWatch called it a sweetener for the IPO.
So even a design company sees value in crypto integration.
It shows how mainstream the thinking is becoming. It lines up with what Robinhood's CEO, Vlad Tenev, predicted that crypto tech will eventually underpin the whole financial system.
Bold claim. Okay, let's touch on some really cutting-edge tech. JPMorgan Chase is shaking up its quantum computing team.
Yeah, they hired Rob Otter from State Street to lead it. They're clearly serious about figuring out how quantum computing, blockchain, AI, how these advanced techs can solve really complex financial problems.
Like what kind of problems?
Things like super complex risk modeling, optimizing trading strategies, maybe even breaking current encryption or creating new forms. It's a long-term bet. Quantum isn't quite ready for prime time, but banks like JPM want to be ready when it is.
Got it. But advanced tech also means advanced threats. Microsoft SharePoint is under attack.
Yeah, active attacks happening right now, affecting potentially thousands of organizations globally, including governments. It's a zero-day attack.
Meaning they found a brand new vulnerability.
Exactly, one that Microsoft didn't know about or hadn't patched yet. It apparently allows attackers full access to SharePoint content and lets them run their own code. Really serious stuff. Even a 2016 version is apparently still vulnerable.
Yikes. And Jim Cramer was telling people to buy cybersecurity stocks because of this.
He was. Names like CrowdStrike, Palo Alto Networks, said companies are frantically calling them for help. It just underscores how critical cybersecurity is and how it's a constant battle.
Yeah, no kidding. And even AI. It's not all good news, right? Barron's Roundtable mentioned AI boosting sales of knockoff goods.
Right. It shows the double-edged sword of powerful technology. AI can be used to optimize legitimate business, but it can also make illicit activities like counterfeiting more efficient and harder to detect.
Man, so much happening. Okay, wrapping this deep dive up, it really feels like everything is connected, doesn't it?
It really does. Corporate moves impacting index funds, government policy hitting your wallet in global trade, new tech reshaping finance and security. It's all interwoven.
A complex web. So maybe the final thought for listeners.
Yeah, maybe think about this. With all this change happening so fast in tech, policy, markets, what are the ripple effects we aren't seeing yet? What seemingly small event today might have a surprisingly big impact on your financial life or just your daily life down the road.
Good question. What's one area you'll be watching more closely after digging into all this? Something to think about.